It sounds almost like you've come up with a solution and you're searching for a problem. Because I'm not so sure that people who are these accidental landlords, which we all know that that is a big, big portion of the marketplace, I'm not so sure that they want to hear that they should become investors. Welcome to the Property Management Success Podcast, where we interview leaders in the industry to uncover the secrets to profitability, efficiency, and achieving true freedom, whether it's your time, money, or lifestyle. I'm your host, Tony Klein, and I'm here to help you build a wildly successful property management business. Let's get to it. Moving from a property manager to an asset manager. So I'm going to let you just kick us off.
So much to unpack on this one. This is the future. Sorry if I'm a little obnoxious, but this is the future of residential property management. When I ask myself the question, what is the most good? What is the most value that I and my business can create in the marketplace? Not a bad question to start with. I keep coming back to this idea that the most value we can create is by helping landlords become investors and helping shift their thinking from rental property to asset, and helping them build a $4 to $5 million plus portfolio that blesses them and those they care for later in life tremendously. Really quick story. My dad was a dentist for over 30 years. I'm second of 7 kids. My dad hated dentistry, poor guy, but he was a good man and a good father, and he provided well for us. We never had a lot of money, at least it didn't feel like it. And I remember he was working 4 10-hour days, and eventually he's like, you know what, I can make more money for my family. I'm going to work 5 10-hour days. And he would be so exhausted by the end of the week that he would lay on the floor on Saturday while us kids romped around over and around him. And I just had this memory. And now, I love this man. He's 78 years old. He's living a good life, but he has 0 retirement. It's like Social Security. And so I don't want, there's no reason he shouldn't own 5 rental properties free and clear. 0 reason. Except I wasn't there with my business 30 years ago. So I want to find anyone I can that should have a trusted friend, guide, mentor, partner that can help guide them through this difficult journey of being a landlord. I think I was talking to Peter Lohman just this morning about this. I wish we had the stats on this. I would bet that 80% of landlords don't make it past 5 years, maybe 7 years. You know, most people do not stick with it long enough. And I've never met anyone that stuck with being a landlord for 20 years or longer that regretted it. Their only regret is they didn't do 4X, that they didn't buy 4 times the properties that they bought. So what's the most transformative, transcendent, extreme value we can add? It's helping build that portfolio. And I think the most crucial part of that is the first 5 years. The margins are the thinnest, the stress is the highest, they're norming to something that's uncomfortable. We have a tremendous opportunity. If it's 20% of landlords that make it through the first 5 years, if we're good enough, we can make that 35%, 40, 50%. Wow. I'm just going to make one more comment so I'm not talking too much before I kick it back to you. I ran some analysis. If I have a client that stays with me 3 years, my profit for that account is $2,600. If I have a client that stays with me for 10 years and transacts 3 properties, my profit on that account is over $30,000. There's absolutely no comparison between a transactional, accidental landlord, upset, begrudgingly, micromanaging and frustrated client relationship, and the one that we can keep for 10 years that gets the big picture, that allows us to be that trusted advisor, helps them build wealth, and we reap an abundant reward.
I am so looking forward to this conversation. So, I'm not sure if we caught this in the very beginning or if the recording caught it. So I want to make sure that people understand
Okay.
the conversation we're having is changing the industry, changing the perception from being a property manager to an asset manager. Now, for the sake of discussion, I'm going to give you an opinion that is probably closer to truth than embellishment. But here's the thing. This sounds like you are taking this, and this is a personal mission. This is almost like a passion that you have to take people like your father who invested in a career and put all of their eggs into this career basket that was going to provide this future for them. And for some people it works out, for some people it doesn't. But we all know that if you can invest in real estate over time, you have a better shot of having diversified income and having two channels to generate wealth. So I am wondering, is your passion for protecting people like your father interfering with your business decisions? It's almost like my dentist calling me every quarter and saying, you need to make sure that you brush your teeth so that you don't have to get root canals. I don't want to think about root canals. And now I'm associating that pain with this guy that's calling me. So does the market, we want to elevate people from owning properties to owning assets. We want to shift from being property managers to asset managers. But does the market actually want that?
I have a few thoughts on that. Number one, I don't know anyone that doesn't want financial freedom and security later in life. So that there's that point, you know. I think there's a lot of people who have heard horror stories of being a landlord. A lot of people have also heard that most of the millionaires in this country made it in real estate. So we've got both of those things that I would postulate is common knowledge, or at least rhetoric out there that people know. Horror stories about being a landlord. You can, most millionaires make it through real estate, and almost everybody wants financial security and prosperity later in life, so they can savor life, so they can savor relationships, so they can have lower stress, fewer concerns later in life. I believe this asset class is not for everyone. I'm supremely confident that being a landlord is not for everyone. But I believe that there's a chunk of people in the middle between really ideal landlord investor profile and terrible landlord investor profile. I believe there's a space in the middle that, depending on circumstance, could be successful. And I think that's where we have an opportunity to affect significant value creation. My wife, when I met her, she was 26 when I met her, and she was under contract to buy a home, a rental property. And she did that in part because she had seen her mother, who owned a rental property for a couple of decades, or at least 15 years at that time, see some prosperity and success with it. I think I met a guy in college, good friend of mine, who told me about his uncle who struggled for years. He struggled for years, Mark, but now he's doing really well. Well, what did he do? Well, he bought rental properties and he started a property management company. So I'm fascinated by that. Let me learn more about that. And then when I realized, wow, somebody else could pay off my mortgage and I get to own this? All right, I will wade through the difficulty here. I think we need case studies, successful case studies. We need people in our life that have walked the path before, that give us confidence about the asset class, and we need to have some grit, and we need to have some financial strength. And I think if you can get those three ingredients together, and maybe some more that you can think of, I think the chances are good that you could make that 20-year run double the asset value, double the rent, pay it almost all the way off. The accelerating wealth building potential over time of owning real estate is tremendous.
So I agree with all of that. I want to circle back around to, and we'll use an asterisk so we can just say everybody wants a stable financial future, right? So we don't have to say almost everybody. There's probably some people that don't, but it's a rounding error, right? So we'll just say everybody wants that. It's not unlike me wanting to run from the West Coast and starting in Los Angeles and running to New York on the East Coast. Or there's actually a Facebook group called the USA Crossers, and you can do that. They have plans. You have to be able to run it legally. You can't run on the highways. You have to figure out different routes. And so I am an observer in that group. I want to do that, but I'm not ready to endure the pain to learn what I need to learn to do that. So I agree that if there was that easy button that we could push, everybody wants that future. Not everybody is willing to do what it takes to have that future. So I want to just kind of say it's not just as easy as just buy real estate and it's the easy button and there you go. The second thing that I want to get a little bit more clarity on is you said there's a section in the middle that this works for. So are we talking about identifying our target client profile and helping those people? We attract them and then we have systems set up to be able to serve those people that want us to be asset managers as opposed to property managers? Or is it your idea that we take our existing portfolio and figure out how to convert them from being somebody that just has a property manager to somebody that has an asset manager? Which is it for you?
Yeah, I think step one is getting really clear and deciding, committing to, burn the ships. This is where this is the future of my business. Period. End of story. I believe that there's demand for this. I believe that I can do the most good here, and we're going to start intentionally overhauling our brand and our operations to serve this unmet need. And then along the way, we're going to have to create educational content. And we're going to have to get really clear about how to communicate with people. I believe, I'm hoping that this is true. My hypothesis is there's enough people that if they're shown, not just spoken to, but if they're shown what this journey looks like, and they're shown the tremendous wealth building potential in this asset class, that we can intentionally attract them into our business. And once we see how valuable that client relationship is to our business because of the tremendous value we create in their lives, then our max CAC, our client acquisition cost, grows exponentially. We can actually spend way more resources looking for and finding that ideal client profile than we ever did with a short-term transactionally minded, grumpy accidental landlord. And then our whole business could shift. This is aspirational. I haven't done this yet. Some people have done this, by the way. That our whole business focus can shift towards focusing on that ideal client, and the other transactional short-term relationships that are still marginally profitable, we might reluctantly agree to engage with. But I don't know. In the last video you and I did, I flipped my camera around and you saw a board on the other side of my wall, and I wrote 100 on that board. That's my BHAG, 100 doors a month. That goal is totally wrong. 100 doors is not the goal, never was the goal. I want to create so much value in the marketplace that I generate $400,000 of lifetime profit per month. So client lifetime value, profit, not gross revenue, but profit of $400,000 a month was the equivalent of that $100 door a month goal. But that was because the calculus was my average profit per door was $4,000 over the lifetime of the door. But I've since realized I could take on 1/7 or 1/8 of the number of clients. And if they're ideal clients that meet the profile that I just described a little bit earlier, I'm going to exceed that goal with way less headache and with a lot more satisfaction. There's so many benefits to this way of thinking, Tony. Not just that we make so much more money and we affect so much more value creation, but also the clients are way more supportive. They have a vision that they're enrolled in, and they understand where they're going. They're willing to sacrifice for it. So we can ask for much higher levels of support, which is one of the primary problems in residential property management to begin with.
Okay, help me reconcile a couple of things. So the first one is, and this is an older stat, it's the last time I saw this stat. This was pre-2020, and I know we had a lot of the institutional investors come in, so I'm going to discount them. I know they took up a portion of the marketplace. However, the last
very,
that I
very
saw...
small portion. Very small portion. I saw the pie chart. It's like 98% are still ma and pa owners. Go ahead.
Right. And so the last stat I saw was it was either 76% or 78% of all single-family rental properties in the United States are owned by an investor that owns 2 or fewer properties. So 78% own either 1 or 2 investment properties. So they have different needs. They have different desires. They have different pain points, different triggers that cause them to buy or to hire a property manager. They have different straws that break the camel's back. They have the different pain points that says, okay, this is too much, I'm out, than a true investor that owns 3 to 10 to 20 to whatever properties. So by shifting this, by saying we're going to target those specific people that are built to be investors, we're going to exclude a big portion of that 78% of rental properties. Then the second thing that I'm having a hard time reconciling along with that, when you stack this, is it's been my experience that the more properties that an investor owns, the better deal they want in relation to the fees that they are paying. So if I'm focusing specifically on a very much smaller group of investors, that is leaving me with a smaller pool to compete with for other people that are trying to go after the asset manager class of clients. And they're probably going to be beating me up. So while I might be able to have a client that owns 30 properties, I'm probably not making the same income revenue as I would if I had 30 individual owners, because those 30 individual owners, in theory, are paying me a higher price. So how do we reconcile all of these things that I just brought up with this momentum of becoming an asset manager?
Yeah, I think both the points you just raised are red ocean arguments.
Okay, so let's hear it.
Yeah, I think there's a chance to pivot and approach this with a new paradigm and create a blue ocean. For instance, I don't think our competitors are other property management companies that people are, if people are comparing fees and negotiating down fees because now they have more buying power, they're out of my. I failed to separate myself and create a category of one. There's so many really cool things we could do if we really intentionally built an asset management program, and we could charge in a completely different way. We could get into that. Asset managers and capital markets charge like 1% of assets under management. If we charged 1% of asset value, Tony, our fees would double overnight. Well, how would you ever justify that? Because you're having a completely different conversation from the get-go, and you're layering a whole new suite of services that is not available in the marketplace, including premium accounting services, maybe paying their mortgage payment, their insurance, and their taxes, and also managing the HOA relationship, which we currently don't do because we can't stand doing that level. Maybe we could get their taxes right now at the end of the year. We send them a 1099, and an end of year statement, and it's like we dump we dump a bin of garbage on their table and say, you go figure this out. What if we actually took that to the finish line for them and actually had services that filled in their schedules on their taxes, knowing their entire financial picture, and guess what? Guess what's also available in the premium accounting services? Escrowing, not just escrowing their insurance and their taxes, which by the way puts more cash in our bank, and we get enterprise credits for it, but also we could also escrow for future anticipated repair costs and vacancies. What a novel idea. And if we did that one thing, we lower the stress level of the accidental landlord considerably. There's a whole other, I've got a whole bunch. I was up at 4 this morning. I couldn't sleep. I was charting all this out. There's so many cool things we can layer in to a unique, novel service offering as asset managers that's just not available, including home service agreements. Because if we go really deep and understand the condition of that asset like an asset manager would, we know what's going on with the roof. We know what's going on with the plumbing. We don't do that as property managers. Nobody's paying us to do this. But if we start charging and thinking like an asset manager, not only will the right client appreciate that level of service, but we will be able to predict with a lot more clarity exactly what those cash needs are and lower the impact of these cash flow, jarring events for those investors. And to go back to the earlier point, I also think, when you sort of broad brush stroked it like, 75% or whatever number was owns 1 or 2 properties. Awesome. Fantastic. I see this as a spectrum of really has the genetic makeup right, from the get-go to be a really effective investor. They're not emotionally tied to the asset. They have grit. They're financially strong. They already have business ownership experience. They know what it's like to empower a business manager. Like all of those things put people at this end of the spectrum. Okay? And the opposites put them down here. There's a chunk of people in the middle. I don't care how many properties they own right now. There's a chunk of people that have the capability right here in the middle to be able to move towards that more supportive, business owner-minded investor if given the opportunity and the education and the right framework. And I think if we design that education, we design that framework, and also it's not. Here's another reframe. Our competition isn't a property management company down the street. It's the stock market. That's blue ocean way of thinking. We're drawing people in. We're not saying, oh, here's the current pie, and there's 75% of these onesie twosie land, but they're kind of a limited mindset. They really want to be really controlling. Guess how many thousands of people aren't in this asset class because they don't see a really clear high confidence path to getting into it. That's an untapped market. That if we design the right program, use completely different language, use completely different terms, there's no way they can compare that to traditional property management because it's not the same thing.
The part of this conversation that I really enjoy and lean into is you are talking about creating a new category of property management. Call it what you want. Call it asset management. But we're really taking a property and doing something that is not currently being done or being done in a very, very small, limited capacity in the marketplace. So I like that. I really enjoy watching businesses take what they're doing and create new opportunity. So I actually want this to work. I actually want this to be successful. I want people to be able to transition over into creating that category of one that you talked about. And you're using a lot of the same language that they use in the book Play Bigger, Category Killer, Category King. So I'm not sure if you've read that before, but it's about not being better. It's about being different and creating that category and becoming that category king in your marketplace where you are the one that is setting the standard and everybody else is chasing you. So I love that part of the conversation. What I'm trying to balance is I wonder how much of a desire there is for that. If somebody told me, I'm going to give you I'm going to let you trade in your truck. So I drive a Chevy Silverado. I'm going to let you trade in your truck, and I'm going to give you a new Lamborghini, just even trade. I don't know if I would take that. Like, I'm not really that, like, it's cool. It's going to sit in my garage, but I'm going to be afraid to drive it. It's probably maintenance is more on it. It's going to eventually, I know this is some kind of trick. It's going to cost me more money in the long run. So how do I reconcile getting more and actually wanting what I'm getting in order to pay for it? Am I willing to pay for these additional services? Or are you suggesting that we figure out how to add those additional services and maintain the same cost, but figure out how to improve the profitability?
No, yeah, we increase revenue to the property manager, but we layer in additional services that aren't currently available that that create an abundance of value for the person. And back to this idea of do people, is there a demand for this? You and I acknowledge there's a demand for the outcome of this. The chief problem in owning rental properties is the emotional makeup of the landlord. That is the chief problem. It's the same problem that exists that financial planners solve in equity markets. Peter Lohman and I had a conversation about this. He said, well, it's probably 50% of the problems that we're solving is, just their emotional irrationality. And I said, no, that's 90% of the problem. But to your point, Tony, people don't ascribe value paying, for that impact unless they're highly sophisticated and they realize I'm irrational. I need a guide here. That guide is going to make me more money. That's why it's worth paying them. Most of our ma and pa investors don't think like that yet, but there's an opportunity to layer in all kinds of services and completely change the conversation. When you start talking about an asset management fee as a percentage of asset value, and the services that we offer are a whole suite of services, one of which is effective property management, you're having a completely different conversation at that point. And what we're selling is a $4 million portfolio in 20 years. And we're layering, because we have the revenue to do it, we're layering in all kinds of guarantees that aren't possible in traditional property management. And the only reason we can even have the sales conversation around that is because we're perceived as something entirely different. And maybe we have to go outside of the current landlord stock to attract that new client. But the numbers show that it would be highly rewarding to do so.
Well, to circle back to that number, the 75% of landlord, or 75% of properties, I think it was 76 or 78, but regardless, the 75% of single family homes are owned by people that own 2 or fewer properties. If you look at the number of investment properties that are in our state, there's still way more than we could possibly manage if we could figure out how to put out the messaging, how to convert our services, how to deliver the value proposition to be an asset manager versus a property manager. And I really love the conversation about creating that category of one, setting yourself out in front. And so I look forward to watching the people who are brave enough, whether it's this or something else, to try to break that mold of the traditional property manager. And I think we've got so many tools, technology, new resources coming down the line. There is so much that's going to be changing our industry that you have to do something. You cannot continue to be the same and expect the same results. We're just past that in our civilization.
100%. Totally agree. Yeah, we need to keep this dialogue going. I think it's exciting times. Next 5 to 10 years, there's going to be an evolution toward this higher level of value contribution creation in our space, and there's all kinds of other things to talk about, because in a highly commoditized space, the creativity and the creativity trends toward everybody doing the same thing, but then just max fee extracting, which then invites regulation. So that's a problem. And this new way of thinking and this new direction, this new vision for the future of our industry, just completely nullifies that problem, because we're doing something totally new that adds tremendous value.
I want to wrap up with this. I think this has been a really interesting, engaging conversation. I mean, hopefully, right? I was a part of it. So hopefully it was engaging. I would love to know, since you and I kind of are on a little bit different sides. I mean, in theory, we want the same thing. We want the same results. I'm not confident that by shifting at this point in time that most property managers are ready to make this shift. So I'm not saying it's not the right thing, but I'm not certain that most property managers are ready to do this. I would love, now we have the YouTube, so at PM Success, Property Management Success podcast. You can either listen on the audio version or go to YouTube and find us. I want to hear people comment on this. And I'm not just saying that so that we can get some comments on the video or whatever. I'm truly interested in what people's opinions are on this, and I'd love to get some feedback about it.
Yep, me too. Awesome. Good stuff, man.
All right. Let's tie it in. I know you want to get us out of here. We've been sitting here for a little while, so let's move us along.
Yeah, get out there. Tony and I do these like we're at the aid station. You're running an ultra marathon race, so get back out there and pound the next 8 miles. We'll see you soon.
Thanks for tuning in to the Property Management Success Podcast. We'll be back with another value-packed episode to help you level up your property management game. If you've got something valuable out of today's episode, please share it with a friend or colleague, and don't forget to subscribe and leave a review so you never miss out on future insights and strategies and tactics. Until next time, here's to your success.